In this video, we will explore 4 points. Initially, we will discuss what is a tax ton and how does it work. Secondly, we will see what are tax implications if you buy a residential property through your company. Thirdly, we will explore some reliefs and exemptions. And finally, we will see how HMRC won £55,000 ATED tax plan case. In January 2024, we got a new lead. Partners allocated that to me. I had a meeting with him and discussed his personal tax plan. During the meeting, he discussed, I have a company and I want to buy a property for my own self to live there through my company. At that time, I said to him, look, let's focus on your personal tax plan now, and then for your company and buying a property through your company or buying a house through your company, we will set another meeting later in February to discuss it further. And at the same time, I also told him, like, if you buy your residential property through your company, then the major corporation tax relief you will get is your mortgage interest will be tax allowable expense for your company, which obviously reduce your taxable profit and ultimately corporation tax. To be honest, at that time, I was not aware of the corporation tax reliefs and what will be the corporation tax implications if you buy a residential property through your company. However, after digging down the matter later, and then I understood there are some special tax treatments if you buy your house or residential property through your company. This video is part of tax planning series in which we are exploring tax issues which individuals may face or may have already faced. In last 2 videos, we discuss RI 35, and now in this video, we will discuss the question, what are tax implications if you buy a residential property through your company? And like in previous video, we will also see some practical cases that HMRC recently won. So for that purposes, we chose HMRC recent case for Belgravia mention in which they won £55,000. And I know it is not common and it is not simple to understand. So before going into a deeper or the tax implications or to discuss the case, I understand I have to explain it to make it more simpler for you guys. Now, you might be thinking, if I own a property or residential property through my company, enjoying all the benefits and I don't have to pay any tax. Yes, there are some circumstances in which you don't have to pay any aided to HMRC. In addition to that, we will also explore what are tax reliefs and exemptions if you buy a residential property through your company. So without a further ado, let's get started. Aided tax tons are annual tax ton which your company must file in advance on or before 1st April in any chargeable period. Or if we go by definition, then it will be most residential properties dwelling are owned directly by individuals, but in some cases a dwelling may be owned by a company or other collective investment vehicle. In these circumstances, the dwelling is said to be enveloped because the ownership sits within a corporate wrapper or envelope. First, we need to establish why UK companies need to file ATIT, and then we will look into chargeable periods. UK companies need to complete ATIT tax ton if the property they own is dwelling and its value is more than 500,000. Now you must be thinking of what properties should we consider dwelling. Properties like houses, flats consider dwelling. It also includes garden, grounds and building within them. However, properties like hotels, student accommodations, hospitals, guest houses, and care homes are not classed as dwelling. To understand chargeable period, first we must need to understand how does ATID work. The first thing you need to work out is valuation of property, because for ATID return, you must revalue your property after every 5 years under ATID legislations. Under recent ATID rules, if you bought property on or before 1st April 2022, then use this date to revalue your property. And if you acquire property after 1st April 2022, then use acquisition date to revalue your property. This revaluation is so important because it is entirely based on revaluation of property. And in final part of this video, you will see when we will discuss HMRC case which they won recently from Belgravia mention, it is entirely based on valuation of property. Following are valuation dates and chargeable period that apply from 1st April to 31st March, or on your screen you can see valuation date and relevant chargeable periods. Like in this, valuation date will be 1st April 2022 if you purchase property before this. Relevant chargeable period will be 1st April 2023 to 1st April 2024, and same goes with other chargeable periods as well. For 2024 to 2025 chargeable period, valuation date will be either 1st April 2022 if you purchase property before this date, or actual acquisition date. And now on your screen you can see property valuation and annual added charge. If your property is less than 500,000, then added annual charge will be 4,400. And if your property value is more than 1 million but less than 2 million, then added annual charge will be 9,000, and so on. So once you understood what it is and how does it work, it's time to explore some tax implications if you buy your residential property through your company. In tax implications, we will see 3 implications. The first one is corporation tax. Profits from the property are taxed at corporation tax rate, which is currently 19% for the profits under 50,000 and marginal rate for profits between 50,000 to 250,000 pound, and 25% for profits over 250,000 pounds. Secondly, mortgage interest paid is a company expense, so it can be deducted from profits before paying tax, which obviously helps to reduce the corporation tax bill. Second one is capital gain tax. While selling a property that you buy from your company, profits are subject to corporation tax rather than capital gain tax. And finally, stamp duty. Limited companies pay an additional 3% surcharge on top of the standard rate of stamp duty, which obviously is a negative part. Buying a residential property through your company can be a tax efficient for additional and higher tax rate payers. However, before taking any steps, seek a professional advice and consider all the factors and understand what will be the implications on the broader term, since the best option will be depend on your individual circumstances. I think we should stop this video here because I know it is not as common, and to understand it in one long video is not as simple. So in next video we will start from tax reliefs and exemptions, and then in the final part we will discuss recent HMRC case which they won from Belgravia mention for 55,000 pounds. So overall in this video we have discussed 2 points. Initially we understand what is it and how does it work, and then we explore some tax implications if you buy a residential property through your company. So guys, until then, please keep me posted and ask me your burning questions. I would more than happy to answer all of your questions. As always, hand ahead salute until the next video.